Hi, I'm Matthew Hibler, Cherry Creek Holdings, a mortgage lender in Denver, Colorado.
And I'm Angelica Apel with the Nostalgic Homes Group at Compass. So, we are really looking forward to a market where first time home buyers will have an in again. Very important. So, we have talked about first time home buyers incentives and they need to know about them. So, Matthew, take it away. Tell us about some first time home buyer incentives.
Well, there's some really awesome things happening in the mortgage lending industry right now. First of all, we know how important first-time homebuyers are to the housing market.
Absolutely.
Because literally the rest of the market is then triggered beyond. So a first-time homebuyer enters the market and buys their first house. The next seller then gets to move up to their next home. Maybe it's for a bigger family. And then the empty nester gets to sell their bigger home and downsize. I mean,
Absolutely.
everything starts arguably with the first-time buyer. Well, regulators know that. Those that set mortgage industry standards, they know that. Fannie Mae and Freddie Mac are the agencies that back most of the conforming or conventional mortgage debt across the country. Well, we have some awesome incentive that is relatively new into the marketplace. It actually rolled out last winter. What that is if you are a first-time home buyer, which is technically defined and qualified as you have not owned a home in the last 3 years.
Okay.
So you could have owned a home before, but if you meet that criteria, you're a first-time buyer. First-time buyers that meet something called a AMI, that acronym is for Area Median Income, actually have a subsidy behind the mortgage rate. So the mortgage rate comes down, and that's the incentive for first-time buyers right now. Who doesn't want a lower rate?
So cool. That's an amazing program.
It really is. And so with the rate savings, the way that it works is Fannie Mae and Freddie Mac have these things called loan level pricing adjustments. All right. So the loan level pricing adjustments consider credit score, how much you're putting down, the type of property, income to debt ratio. There's all these different things that are measured. Well, if you make at or below the AMI per county, then these loan level pricing adjustments no longer come into play. They're removed. It could translate to as much as 1.2 or 1.3 savings to the rate in the best case scenarios.
That's incredible.
That translates to $500 or $600 a month. So if you're a first-time buyer and you haven't talked to a mortgage lender recently, you should probably revisit, because these incentives that have just rolled out within the last 4 or 5 months are now influential enough that could be motivating for you to finally get into that first property.
In Denver, what is that income approximately?
In Denver County, it was actually increased. The AMI was also increased to now $141,000 roughly. So if your income is at or below $141,000 a year, you could qualify for the subsidy I'm talking about.
Amazing. So that's a great reason for first-time home buyers, or if you haven't owned in 3 years, to get into the market and try your hand, because you have more opportunity now and there are more options to help you. So what an amazing combo.
It is. It's so much better than paying rent, isn't it?
Indeed. So here in the Denver metro, and more specifically in Highlands, the low end of rent is going to be about $2,500. So either if you're paying rent or you're paying a mortgage, you are paying someone's mortgage. So it might as well be yours. Let's make 2023 the year that it is yours.
And to explore that further, when you think about or talk about real estate, call Angelica April 1st.
And if you need a mortgage, Matthew Hibler is the expert.